Welcome to Market Focus. I'm Jessica Darnborough. Making headlines today, the property market hits rock bottom and brokers are encouraged to use non-banks to stimulate competition. But first, to our lead story. The broker proposition will be vastly different in the future, a key industry stakeholder has claimed. Speaking at an ING Direct hosted roundtable in Sydney yesterday, the lender's Executive Director Delivery, Lisa Klaus, said technology was reshaping the industry and forcing brokers to change the way they present themselves to clients.
How could you use technology, your iPad, your iPhone, to be able to input all of your data, talk to your back-end system in the bank, do your verification, and sign your client up on the spot. The days of coming into the client coming to your office, sitting down and waiting through paper, I think those days are limited.
The various overseas debt problems could force Australia's major banks to tighten their lending criteria once again. Speaking to Market Focus, Finance Made Easy's Tony Bice said in times of economic uncertainty, Australia's non-bank lenders shine, both in terms of product and policy.
If we head down the path of another GFC or something along those lines, then no doubt banks will tighten up their policy. It's a given. That's what they do in this type of market. It will just mean that it will be more difficult to get applications over the phone given the tightening of policy and the more attention to detail. Not that credit people don't take attention to detail, but they'll be just taking a little bit more of a closer look at certain aspects, which means that you're going to be in a position of having your applications held up even longer. And that's probably another good reason to start looking at your mix of where you send your business to look at places where you think you can get a decision faster.
And finally, APM's Andrew Wilson told sister publication Smart Property Investment that with property prices at rock bottom, there is now no better time to buy.
Interest rates are flat. They certainly will remain flat, in my opinion, for the rest of the year. There is too much mixed signals coming out of the economy for the Reserve Bank to risk an interest rate rise at this stage. I think that we may even see the potential for an interest rate fall within the next 6 months. Wouldn't be really good news in terms of the big picture, because that would signal some sense of disturbance over Australia's economic performance. But notwithstanding that, I think that the outlook is reasonable for Australia's economy, and it definitely is, in most capitals, the bottom of the prices cycle at the moment.
That's what's making news today. Thank you for joining us. I'm Jessica Darnborough.